Gilbert Garcia, managing partner, Garcia Hamilton Associates, the biggest bond investment firm in Texas, a little less than $16 billion under management. Richard Rosso is the director of financial planning for RIA Advisors, that has more than a quarter-century experience in the financial services industry. Thank you both for being here.
Thank you.
Gilbert, you wrote a letter at the beginning of the week, said, don't panic. Is that still the advice?
That's right. Because remember, what I was focusing on is this isn't a financial crisis. This is a health crisis, and it should be looked at as a medical crisis, because during the financial crisis during Lehman, the banks were poor, they weren't capitalized. Truly, capitalism almost failed. Here, the banks are very well capitalized, and we're going into this bump with one of the strongest economies, very low unemployment, very high consumer confidence. And so this really is a health crisis. And that's what I wrote about. I tried to let people recognize that this disease is something we've kind of seen before, whether it was swine flu, whether it's influenza, whether it's been other sorts of diseases over time.
So, Richard, what do you do bonds?
I do
primarily,
bonds.
so pensions, and so you don't deal with individuals as much as you do. So what are you telling when people call up, I'm frantic, I don't know what I'm going to do about my individual investment?
Well, first I tell people, listen, you can't discount your feelings. Panic or not to panic is good advice. But it's okay to worry. It's okay to feel stressful because you've built or you spent your life building your wealth. It's just that you don't take it out on your investments. You make sure that you understand where you are. What's happening now through this kind of situation, listen, we've always been told that these stock market or these economic outliers, black swans as they're called, only happen every 4,000 years. Interestingly, how they come along much more often than that, right? So you have to tell people, listen, this is the time you will understand what it means to own variable assets, assets that actually do go up and go down. Over the last 10 years, as a stock investor, you only had one thing in your mind: stocks always go up. Tenured investors get it. Markets move in cycles. New investors think they can go onto an app like Robinhood, buy a stock in the morning, and it's up in the afternoon. That is an issue.
So, but now the stocks have gone down.
Well, can we talk about that real fast? So first of all, you know, I got in the business in '85, and so I was there when we had the stock market crash in '87. It fell 25% in one day. One day. So here, we've corrected about 25% from the high. It's been kind of a slow bleed for the last month or two, with kind of a big move yesterday. But I remember it was 25% in one day. But here's the thing that's important to know. If you had panicked and rearranged all your asset allocation, within 2 years it was back. And if you look over time, whenever there's been big changes, those have probably been opportunities. And I expect if you look at where we are today, even after the 25% correction, we are where we were about 2 years ago, 2.5 years ago. And so I expect the economy to remain strong. It'll get a boost because of low interest rates. It's going to lead to an explosion of housing, new housing purchases, permits, refinances, and activity. And with low oil prices, it's essentially like a tax cut for the masses. I expect the economy to come out of this, when it comes out, even stronger than where it was.
You tell people that now's the time to look for things that are selling low that you can buy now that are going to...
Yeah, if you've had a balanced portfolio where you haven't been overwhelmed with fear and or greed, bonds have held up incredibly well through this, right? Who would have thought we would have seen the 10-year Treasury where it is today? So if you've had this kind of balanced portfolio and you've got 10 or more years to weather it out, you actually can step back and be a little bit cooler about it. But the problem is emotions. People have lizard brains. They don't understand that this loss may not be permanent, because when something called recency bias, which means is whatever's happening now will continue forever. And things change very dramatically. I blame passive investing, indexing, where people can just try to get out of the overall S&P 500, say, for example. That means you have to sell the underlying stocks. You create this cascading effect. It is very disconcerting. But if you're not looking at things on a price basis and more on what did I actually lose, and I have the opportunity to buy if I have a level head, then yeah, this could be one of the best opportunities we've had since the financial crisis to buy stocks on sale. It's just very counterintuitive, Kembro, emotionally for people to do it.
And one of the things was, You know, the night before last, the president spoke. And this is not a political commentary, but at the end of the day, I think people were expecting a lot more federal attention and taking a leadership role worldwide on the disease. And instead, it was somewhat of the same old, and I think that's what led to the big move yesterday. Down. And so that's why if you look, a lot, and I give a lot of great credit to our mayor, our county judge, and mayors and governors all across the country who have taken decisive leadership action. And we may not like it, but things like closing schools, all these sorts of things to limit the spread of the virus. And I think that's why you see stocks up today, because people are taking this seriously.
And so certainty in the stock market is one of those things that people like.
Yes, and people don't realize, listen, I'm going to get all out of the market, and I'm going to get all back in when the crisis clears. You are already too late. Okay, market is moving way ahead of you. I call it the Wile E. Coyote and the Roadrunner syndrome. Remember how the Roadrunner would always be way ahead of Wile E?
Yep.
Okay, that's the market, and you're Wile E. Okay, you're going to be. Think about it. The market, if you're already, say you were in recession, the market's already priced it in and has moved ahead. So if you're going to wait for the all clear, there is an old adage of buying when there's blood in the streets, and I'm not one for big financial cliches, but if you have a proper allocation that's weathering out the storm very well, yeah, you can take a deep breath and go, wow, what kind of opportunities are opening up here that we didn't have 3 weeks ago?
I think this is a fascinating conversation. Why I asked you guys to come in. We're going to continue to have more of this conversation on our Newsmakers Extra because we have more to talk about.
Yes, we do.
We do. So the very easy thing to do is to go to click2houston.com on our Newsmakers page, and then go to the Newsmakers page, and then click on the link to this conversation, and then we'll continue this conversation going forward. Thank you so much for coming in for this part of the program. We appreciate it. More juicy nuggets to come.
Well, thank you.